If a digital asset activity occurs on the spot market, it's not a security, it's not a leveraged retail commodity product, then there is no CFTC or SEC regulatory authority over that product. There is only CFTC enforcement jurisdiction. How large is that universe? It is large, and I base that on two key assumptions. First, I looked at the top 15 digital assets by market capitalization. Now, there are thousands of digital assets, but the top 15 account for about 86% of the market. Second, I looked to what the commissions themselves have said about those 15 digital assets. Not a chairman, not a commissioner, but the commission itself, because only the commission can speak for itself. Based on my review and looking at CFTC and SEC enforcement actions, it appears that the CFTC has asserted that 7 of the top 15 digital assets are commodities. These 7 digital assets are some of the largest, accounting for approximately 76% of the digital asset market. The SEC, as a commission, has never challenged any of those CFTC determinations, some of which have been around for years. Instead, the SEC, in an enforcement action, has asserted that only 1 of the top 15 digital assets is a security, and that digital asset currently accounts for about 2% of the market. 76 to 2. 76% a commodity, 2% a security, and the rest of the top 15, about 8% undetermined. I don't think that should be very surprising, because the market division between swaps, regulated by the CFTC, and securities-based swaps, regulated by the SEC, is about 90% swaps for the CFTC and 10% security-based swaps for the SEC. So I conclude where I began. There's a significant regulatory gap in federal spot market regulation of digital assets because the large majority of digital asset spot market activity falls outside the regulatory jurisdiction of the CFTC and the SEC.